Hi, welcome back to ICT Trading Concept. So today's video I would love to talk about the gold. Okay, so some of you are actually maybe you are trading gold and you told me to make a video about the gold. So I thought, okay, it's time. As I don't have anything to do, I can go with the gold. That is the reason I'm here. So this is the first month of a new year, so I came to the yearly chart. Okay, so this is the chart from the year, and you can see prices taken this relatively equal highs, and I believe this is the highest high. Okay, so it has just taken last year the equal highs, and it has made the highest high. So far I can see the price action from here, so it has made the highest high. After taking the buy side liquidity, I would love to see some kind of lower run. Now when I'm expecting some kind of lower run, there should be some level where price can go. Okay, I would love to mark them, and after that where price will go, that is different matter. Right now I would love to mark the consequent encroachment of this candle's wick and the order block level. So let me mark them. So this candle's 50%, that means this is the level, and the order block level. So this is the order block level. As both of them at the same level, I mean same place, I would love to stay with the order block. Okay, so I'm going to remove the consequent encroachment. Instead of that, I would love to mark the order block level. Now order block, there is two level. So this is the opening of the order block, and this is the closing of the order block. Then there is the mean threshold of the order block, that is different. I don't need that one because that is a huge run. So I'd love to stay over here. Then I will go to the monthly chart. Let's see what I have over there. Okay, what okay, so I think I have to go like this way. So this is the monthly chart, and you can see price has taken this high. I mean, it has taken over here, and this is the order block opening, and here. Okay, this is the two level from the monthly chart. I mean from the yearly chart. Now I'm in the monthly chart. From monthly chart, I would love to make the more precise level. So I'm going to remove this order block, this level, and I would love to mark the order block from the monthly chart. So from here, this is the order block. I would love to mark this one, and I'm going to remove that one. So until here, I'm expecting price will come here. Okay, if it can go through that order block level, then I will mark the consequent encroachment of the, I mean the mean threshold of this order block. If mean threshold fail to hold the price, this low will be my target. Below this low, you can see this is the relatively equal low, so that is the sell side liquidity. Let me actually color the, change the color here. So here, so that will be the sell side liquidity. When this level will be broken, after that I will look at the mean threshold of this order block. So this is the second level that should have, I mean that has to be broken. If this two level is broken, then only then I will look for this sell side liquidity. Until then, I'm expecting the lower run. Now if price would love to go higher, it can go, but it has a level. Okay, the consequent encroachment of that week, that should be the highest level if price would love to go. So you have to mark all of this level to your chart, because nothing is certain. That means price can come over here, then it can retrace little bit, but if this level is broken, then that high will be targeted. Okay, so the thing is, if it happened, then that will be my target. If it happened, then this will be my target. So you have to read the price like that way. If you see price has started to go higher, you have to think that market is actually coming over here to this consequent encroachment of this week. If you see this consequent encroachment has broken, then this high will be target. Now if price start to go lower, then this mean threshold, I mean the order block level, that should be your first level, your target. I mean, after taking this low, then this mean, I mean order block level. After that, this mean threshold. If all of this level are broken, then this sell side will be more obvious. After that there is fair value gap, that is different thing. I mean, I think that will take more than one year. It can happen by this year, but I don't think so price will expand that much lower by 1 year. So this is the weekly chart, and you can see from the weekly chart price has taken sell side, I mean the buy side liquidity. It tried to go higher, but it has been rejected from the rejection block. So this candle's opening, I mean the close, that is the rejection block. Price came to that rejection block, price rejected. Now it is going lower. Where is my first target? Where price is heading? To that low. This low is my target. Now I'm targeting this low. Okay, if price can take that low, then this relatively equal lows. Look at this relatively equal lows. I'm just making my time frame shorter and shorter. Okay, so that are the relatively equal lows, and that is actually the sell side. After taking that low, if you see price, actually price is heading lower, this relatively equal lows will be your target. Now this is the order block level, don't forget, from the monthly chart. Look, these two level are at the same place. That means if price would love to go lower, it can come and take that sell side liquidity, then it can retrace, it can do that. Okay, now this is the mean threshold of the order block from monthly chart. Look over here, you have a very nice inversion fair value gap and also a very nice fair value gap. So there is much more possibility if price can take this low, after that low, this order block level, mean threshold level, it can come to this fair value gap. There is much more possibility. Okay, now if this fair value gap fail to hold the price, then this sell side liquidity will be your target. That is for too long. Right now I'm thinking about this low, that should be target. I mean that is the first target for me right now. If price would love to go higher, this consequent encroachment, that will be my target. I mean above that high, this is the last level price can go. If this level fail to hold the price, I mean if I see a body close above that high, I mean that consequent encroachment, then this high will be targeted, though I don't want to see that. I really would love to see some kind of lower run. Now price is not going directly to that level, it will go little lower, then retracement, lower retracement, price will do that type of things. So you have to remember that. Okay, now let me go to the daily chart. From the daily chart, I'd love to mark the rejection block. So that is the rejection block, and let me change the color actually. So price came here to the rejection block, then it started to go lower. Right now where price is heading, I mean where is right now the price is over here to this daily fair value gap. I would love to see how this daily fair value gap worked with the price. Now I'm at the level of the daily chart. If I see price can go through this daily fair value gap, after that this low will be my target. Okay, then I would love to mark this low and that low. They're relatively equal lows. So that should be my target from the daily chart. That is my sell side liquidity. Now, when price come here to the last daily fair value gap, it can do some kind of retracement. Okay, if it would love to go higher, don't think it is going higher until this high is broken. You have to think about the lower one, because from the very high time frame, from the yearly chart, you have seen it has taken the buy side liquidity by that specific week. It has taken all of the buy side liquidity over there. So what it needs to do first, it has to take a sell side liquidity first. Okay, so when, yeah, it can do some kind of retracement, but think like that way, it is going to take that sell side liquidity, then this sell side liquidity, maybe it will come any of this fair value gap. But here you can expect some kind of rejection, I mean the reaction from the last daily fair value gap. Now as this is the daily fair value gap, you have to go to hourly chart or 15-minute chart. I love to mark it from the 15-minute chart, but let me actually check, is there anything from the hourly chart? Okay, from hourly chart, it has taken all of the buy side liquidity. I got very nice market structure shift. Price came, price can come over here. Okay, don't get me wrong. Price can come to this hourly fair value gap. So this is the hourly fair value gap. Above that hourly fair value gap, there is another little small fair value gap. But I would love to mark this hourly fair value gap. So price can come to this fair value gap. It can take the buy side liquidity from there, then it can expand lower. And from 15-minute chart, okay, nothing is actually perfect from the 15-minute chart, so it's okay, no problem. So from 15-minute chart, you have to observe the price, how it reacts from this daily fair value gap. If you see price is actually going through this daily fair value gap, this sell side liquidity will be your target. Until the consequent encroachment, price is above the consequent encroachment, you can expect some kind of reaction or some kind of retracement. That means uh, a run toward the buy side liquidity. After that, when price will go below this consequent encroachment, there is much more possibility price will go toward that sell side liquidity. So it's kind of a very small video, and I mean, this is the way I read the price. Then I mark some specific level and I observe them, how it reacts from that level. This is the way I read the price. Okay, so if it is insightful, then let me know. If it is not, then also let me know to the comment box, because then I can improve myself to talk about the price. Okay, so please let me know if it is okay or not. Thanks for watching the video. If you are new, you can subscribe to my channel and give me a thumbs up. See you guys.